what we're going to get into today is a lecture I like to call, Who the Heck is Beardsley Ruml? So to start this, we are going to go on a shopping trip together. This is something we can all relate to. So you guys are all familiar with Macy's, right? Macy's department store. Okay, so we're going to go on a shopping trip to Macy's. So you just parked your car, you're now walking towards the mall, towards Macy's, and you come across a very wealthy individual. Now you have a choice. See, we're starting this out with a quiz. So you have a choice. You can choose either to loan this individual, wealthy individual, your money, and he'll pay you back, however, won't be paying you any interest. Or you can borrow money from this individual, interest-free, and then you pay that money back in the course of a year. Now, I know you have a third choice of walking away because this guy's creeping you out, but this is economics, so you really only have two choices. So now, your first question in your mind is, would you rather loan this individual money, or would you rather borrow money from this individual, both being interest-free? There's your first question. Keep in your mind. Second question. You go to Macy's, you make your purchase. You decide, since you are fiscally responsible, you're not going to use your credit card, you pay in cash. So you give the cashier your money, they then give you change. You now jump up in excitement because they just handed you money. They just gave you money. That's your second question. Keep that answer in your mind. So you get really, really excited when the cashiers give you change. Now, third question. What would you do if the cashier handed you a receipt and said you'll get your change in a year? Think about in your mind what you would do. Here's your merchandise. Here's your receipt. We'll go ahead and we'll mail you your change in 1 year. And the last question is, would you ever pay somebody to get your change for you? Let's say Macy's department store made it really, really difficult for you to get your change. However, there were some people out there with some expertise in change getting. Would you ever pay this person to get your change for you? So I want you to keep those four answers in your mind. That brings us to understanding who the heck is Beardsley Ruml. What does he have to do with Macy's? Well, I use these questions to kind of illustrate how our current income tax system works. Now, to understand the way income tax works, we go way back to 1914. 1914 was the first year that federal income tax was ever, a long-term federal income tax, was ever levied on people's incomes. Small percentage of the population paid it, relatively small percentage. Now, the way it worked from 1914 all the way up to 1943 was if you had to pay federal income tax, you paid it at the very, very end of the year in one lump sum. So you'd figure out how much taxes you owed, and you would sit down with your checkbook, and you would write a check to the federal government, federal income tax, one check, send it in. Now, of course, this was a pretty sizable payment. So being fiscally responsible, you would save money throughout the year. So every month you would have a separate savings account that you would estimate your income, estimate your tax burden. You would take a small amount of money, put it in the savings account every month. So you knew that you would have enough money at the end of the year to save your money, to pay your taxes. So this worked well. From 1914 to 1943, this is exactly how it worked. Now, in 1943, the U.S. was well into World War II. And what happened was government expenditures, for obvious reasons, skyrocketed. So the federal government now had somewhat of a conundrum. They needed a tremendous amount of money from the taxpayers. So what they did was they changed the entire tax system. So now, instead of only the wealthiest 1 or 2% of all Americans paying taxes, they were now going to levy an income tax on nearly every single person in the country who had a job. So the idea was you tax everybody, the government brings in a little bit more money. So about halfway through 1943, the Gallup organization, which puts together all those great Gallup polls, put out a poll regarding federal income tax. And what they did was they went out and they asked Americans, how many of you are saving up to pay your income tax at the end of the year? And the answer was only about 15% of all Americans, of all taxpayers, were saving to pay their taxes at the end of the year. This meant there was approximately 29 million people who were most likely going to be guilty of tax evasion at the end of the year. You had 29 million people not saving to pay their taxes at the end of the year. Now, obviously, this upset Treasury Director, who at the time was Henry Morgenthau. Henry Morgenthau was a little bit upset, saying, are we going to have to throw these people in prison? More importantly, what about all this money that we had already spent? How are we going to get this back? Just presented a big problem to the federal government. So in comes Beardsley Ruml. So who the heck is Beardsley Ruml? Well, Beardsley Ruml was a pretty bigwig in both business and academia. He had spent a few years at the University of Chicago as Dean of their Social Sciences Department. From there, he moved on to the treasurer as well as CEO of the Macy's Corporation, where you all just went shopping. And he'd been with Macy's for many, many years as a high-level executive. He was also chair of the New York Federal Reserve Bank, and he was an economic advisor to FDR. So Henry Morgenthau pulls over Beardsley Ruml and says, all right, we need your help. We need to figure out